taxes are more than likely, okay, I'm not an economist, I'm not a CPA, are at the lowest that they're going to be for quite some time. I'm going to go ahead and pay the tax bill now at this low tax rate and then step up my basis.
What have you found to be the biggest frustration when it comes to the 1031 exchange or exiting highly appreciated assets?
Well, I actually we were talking before we jumped on, I had 4 failed 1031s last year. And so I can speak from experience on this one. For me, it was just, kind of like, I love your words, the shotgun wedding approach. I decided to take a crack at it, and I 1031 all of my my 4 assets that I was exiting. I put them with a qualified intermediary, and I just couldn't identify an asset that really truly made sense. And I know for me, it just I felt more comfortable because I actually had options to go into a syndication or multifamily and get higher cost segregation and accelerated depreciation. I knew about that. So I didn't really feel pressured to have to go through the 1031, but I see investors all the time make poor decisions on going into their next asset because they feel like they have to execute the 1031. The 1031, we're in a unique time right now, at least for the until 2024. If taxes are more than likely, okay, I'm not an economist, I'm not a CPA, are at the lowest that they're going to be for quite some time. I'm going to go ahead and pay the tax bill now at this low tax rate and then step up my basis. And so I really think 1031 is an amazing tool. However, I think there's so many different options out there. I actually have a friend of mine that's exiting out of a condo right now, and he's like texting me like every 5 minutes going, please, can we get on the phone? I need to know what to do with my capital gains. And I'm like, well, when do you need to know by? And he was like, today.
Yeah, there's a lot there. So absolutely could agree with you more on the shotgun wedding, right? The 45-day engagement, 180-day marriage. And oftentimes that it can be a bit daunting. We also have a minimum 1 million net proceeds, $1 million gain. And we do that because otherwise, you might be able to just do some cost seg passively, or, pay the tax, do some cost seg to offset some of that. Just depends on the size of the deal. And then some deals don't even qualify for a 1031. Like we just did a cryptocurrency sale, a $5 million exit of over about a $49 million gain. And so she bought Bitcoin for 50,000 and it went to 50 million. And so for her, she wanted to exit, defer that tax, and invest it into a business venture that could get some depreciation. So we talk about this idea of it's no longer about cash flow, it's about tax flow. And by the way, it's always about cash flow, but it's increasingly more about tax flow because how you exit matters, because it's 30 to 50% capital gains tax depreciation recapture. And if you're not investing in things that give you like cost segregation, accelerated depreciation, and or cash flow that can be offset by that, then you're putting yourself in a disadvantaged tax flow situation. Even though you might have some good cash flow or good high income, Robert Kiyosaki says it best when we want to be on the right side of the quadrant, which is a business and an investor, because you get the best tax treatments rather than a W-2 or self-employed. And when you understand how to unlock that, and by the way, we have a cool thing called a Deferred Sales Trust, where you never have to worry about a 1031 exchange ever again. You can defer capital gains tax on crypto, businesses, real estate, save a failed 1031 exchange. So you can invest when it makes sense for you. All tax deferred. You can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com.